Hello and welcome to 3.0 TV. I am Vishakha Thakur. It's Monday, the first day of the week, the day we bring the latest updates from the Deal Street. It's a bouquet of handpicked stories that we collate for providing you the flavor in the Web3 space. But first, a quick look on the trends so far. AI is the buzzword these days, so it's not surprising to see most of the deals that we cover this week are representing this sector. Google, Cisco, Amazon, you name any marquee brand and will find they have project or plans to mark their presence in this sphere. So without much ado, let's move to the top deal on the show. Silicon Valley giant Cisco announced Thursday it agreed to buy analytics and AI-powered cybersecurity firm Splunk for $28 billion, marking one of the largest acquisitions of 2023 and the AI era. The all-cash $157 per share deal represents a 31% premium from Splunk's $119.59 share price at Wednesday's close. The acquisition positions Cisco to build the next generation of AI-enabled security and observability, Cisco CEO Chuck Robbins said in a statement accompanying the release. Cisco is among the largest and most profitable tech firms in the world, with a $225 billion market capitalization as of Wednesday's close and $12.6 billion in net income during its last fiscal year. Splunk, which was founded in 2003 and went public in 2012, reported a $63 million loss last quarter. Shares of Splunk were up nearly 40% this year prior to the proposed sale, enjoying the surge in investor interest in AI, though they remained nearly 50% below their 2020 peak. The deal comes during an unusually down stretch for M&A, as the first half of 2023 was the quietest period for M&A by total deal volume globally since the first half of 2020, according to PwC data. Well, the race for supremacy in artificial intelligence is heating up. Amazon today announced a multi-billion-dollar strategic investment in Anthropic, the AI company that launched the chatbot Claude 2. The e-commerce platform will first inject $1.25 billion, retaining the option to escalate its investment up to as much as $4 billion. The strategy positions Amazon to face off against its rivals like Microsoft, Meta, Google, and Nvidia in the burgeoning AI field. On the Anthropic side, the company will not only benefit Amazon's investment capacity, but also gain access to Amazon Web Services, computational power, and essential for developing AI models. Notably, Microsoft has backed OpenAI with similar collaboration of cash investment and letting the AI company tap its services. Through the partnership, Amazon's developers will gain access to Anthropic's models on Amazon Bedrock. Well, this integration will let them enhance their products with AI capabilities, improve existing tools, and craft novel customer experiences across Amazon's diverse sectors. Furthermore, AWS users will be able to tailor Claude, optimizing the model's features for their needs. Last July saw the debut of Anthropic's Claude 2, positioning itself as a key competitor to ChatGPT. This month, Anthropic introduced Claude Pro, a premium chatbot service. And now let's move on to our next deal, which is again from the AI space. Nerin, a US-based semiconductor startup, said on Tuesday it raised a fresh round of funding as it looks to ramp up the commercialization of its AI chips, which it hopes will rival Nvidia's. The company said it raised an additional $49 million, bringing its total round of funding to $97 million. Taiwanese giant Foxconn, the company that assembles Apple's iPhones, and Alltech, a communication tech company, were among the investors in the round. Nerin is looking to capitalize on massive investor interest in AI and the chip technology that underpins it, underscored by Nvidia's 180% rally this year and the initial public offering of semiconductor design arm in the US last week. In contrast, Nerin designs a chipset that goes into devices like consumer electronics and cars that allow AI on the edge. That means AI runs on a device rather than in the cloud. Advocates say this is better for security and speed, as the AI application does not need to come from the cloud. Moving on, Proof of Play, the game studio behind the blockchain-based social role-playing game Pirate Nation, announced today that it has raised $33 million in seed funding in a round co-led by Anderson, Horowitz and Green Oaks Capital. The studio, co-founded by CEO Amit Mahajan, previously co-creator of the smash casual game Farmville at Zynga, says it will use the funding to grow the company and further scale its technology, which enables fully on-chain games that can live on indefinitely. Emmett Shear, co-founder and former CEO of video game streaming platform Twitch, has joined Proof of Play's board alongside the raise. Other participants in the $33 million seed round include AngelList co-founder and former CEO Naval Ravikant and entrepreneur and former Coinbase CTO Balaji Srinivasan, according to the announcement. Pirate Nation was originally deployed on Polygon, but it set sail for another Ethereum scaling network, Arbitrum Nova, earlier this year in search of cheaper network fees. Even though it runs on a blockchain network, Proof of Play says that players can remix and add their own content to the game, customizing and expanding it all the while. And now let's move on to the last deal. An alumnus of Google's AI research unit, DeepMind, has a new venture fund, Mythos Ventures, that will bankroll young AI startups. Vishal Maini, a former DeepMind researcher, has founded Mythos earlier this year and has raised $14 million from more than 4 dozen investors, according to a filing this month. Maini is one of dozens of former employees from Alphabet Inc.'s Google, now equipped with money, expertise, and the desire to shape AI technology as an entrepreneur and investor or both. Venture investors in public companies have plowed billions into AI startups during the past year, supercharging the nascent industry and increasing concerns that the tech is developing without adequate oversight. Many said safe and ethical development of AI, a focus of his while at DeepMind, will continue to be his priority as an investor. Mythos will back seed-stage AI startups building what many described as pro-social technologies. Many said San Francisco-based Mythos aims to write checks between $100,000 and $1 million. So far, the firm has backed one stealth company and 3 other startups: the robotics stone carving factory Monumental Labs Inc., real estate valuation company ValueBase, and research assistant Illicit. Illicit, which spun out a non-profit research lab, opt into a public benefit corporation, said Monday it raised $9 million led by VC firm 50 Years with participation from Mythos, Google chief scientist Jeff Dean, and others. With that, we have come to the end of our show. I am your host Vishakha Thakur, signing off for the day. Keep watching 3.TV for interesting updates. Log on to our website www.3voicetv.io or scan the QR code.